Hey team, in this video we will be analyzing and forecasting the market for gold, also known as Xauusd, from a technical and fundamental perspective. Coming on to the fundamental perspective first, the gold was up on Monday in Asia and America, with investors welcoming the news that the US Congress reached a deal on the latest stimulus measures. The gold futures were up by some around 10 points, passing the 1900 mark. The US Commodity Futures Trading Commission said on Friday that the hedge funds and the money managers raised their bullish positions on gold and silver contracts in the week to December 15. The dollar was also up on Monday, chopping up the gain of the yellow metals. Republicans and Democrats reached an agreement on $900 billion package over the weekend. The House of Representatives will vote on the bill later in the day. This was the main catalyst causing a bullish momentum entering in the market according to fundamental perspective. Furthermore, we have seen a strain on the COVID-19 vaccine, which means the results which are driven from the COVID-19 vaccine or the people who are vaccinated aren't a positive news. However, we are receiving some of the negative news which have increased the uncertainty in the market. So the people were hedging their money in the market. However, coming on to the current price chart, currently we are on 4 hourly chart, and here the things which were suggested by the fundamentals, we can't see something clearly replica of that or something similar that, as we were expecting more bullish momentum entering in the market. However, as the market reached an area of some around 1900, we did see a panic sale of entering in the market from some around 1900, testing us major support of some around 1853. We can see we have seen a sale off in the market within 2 to 3 hours of some around 50 points. Now, coming on to the technical perspective, why we did see a sale off. To explain this, we have to go on a 30 minutes chart. So the market started trading some around by making a gap downwards, and the market did started trading some around 1863. Then as the market did open, we did see a huge gap upwards in the market for the gold, and we then see that the market did started trading upwards momentum. Since then, market did test a major resistance. Our market was close towards the major resistance, and we did see a panic sale off. In order to cover or fulfill this particular gap, we did see a sale off, and then we can see that the market on the same day twicely tested a major support zone, which is in range of some around 1858 till some around 1853. Thus, according to me, this theory sits here. As the market opened, it made a gap up, and the gold has made its history whenever it make a gap up within on present day or either on the next day. The market for the gold surely 100 out of 100% did close that particular gap. Thus, the market for the gold never opened or left its open gap. Thus, the market, in order to close the gap, did go for a sale off from some around 1906, and we did see an retest towards this particular area of some around 1858. Now, coming on to the current trades, what a trader should do for 21 and 22 December. So we can see that the market is trading in a range of some around 1882. Here, what we can analyze or what we can draw is a support trend line. Some around here. Let me change its color to green so it's easy to highlight. So we would be again looking for going long, either or a retest towards this particular green support trend line, or either a test on this particular red support trend line. Here we have drawn our support trend line, and for the trade of 21 and 22 December, we would be looking on this particular support trend line, and we would be looking for long opportunities, as according to me there can be a sell off into the market for the gold. However, the sell off wouldn't last, as the fundamental, as it is not having any backup fundamentals, due to which we can see a sell off. However, the current fundamentals are only indicating that we can see a bullish momentum entering in the market. That represents my perspective, which was explained in the weekly forecast. Now, currently the market is trading somewhere around 1881, according to me, and great price to go long would be a retest of somewhere around in an area of 1874, with our stop losses would be placed some around 1866, and our take profit would be placed. Our first take profit would be placed somewhere around 1894, and our second take profit or our final take profit would be placed around this particular resistance, which is some around 1916. So our first take profit would be some around 1895, with our entry to the point of 1874, with our stop loss of some around 1866, trade given an risk to reward of approx 1 ratio 1.6, and our final or our second take profit would be some around 1905. This trade will give a next reward of approx 1 ratio 2.5. If you are new to the channel, so do consider subscribing. If you like the video, do like, share and comment below. Thanks for watching.